10 best investment areas in South Africa is what we're going to be discussing today. For those of you who don't know me, my name is Lawrence Bull. I'm a property investor, speaker, coach. I'm also a very proud author. So this is my book. It's called Financial Freedom Through Property. It's exclusive books and all over the place. So if you would like a link, I'll put one in the comments section. I would love your support on that. I'm also a digital entrepreneur, the founder of myapp.property app, which I will speak a little bit about today. And I'm an expert when it comes to multi-let. So that's where a lot of my time and attention goes. Now, just quickly, before we get into the webinar, I also just want to let you know about another webinar that we've got going on. Let me just quickly show it here. So this is a webinar that will be happening on Thursday. So this Thursday at 6 p.m., I'm going to be showing you how to use bank financing to build a property portfolio. I see a lot of people, especially in the polls, have been saying that a lack of financing is what's holding them back. And what I want to show you is how you can use the bank as the other people's money and leverage an infinite amount of lending. So that third point there, the learning outcomes, you've got the insider secret to leveraging an infinite amount of money from the bank. Now, that might sound too good to be true, but it's not. And what I'm going to show you is exactly how people like myself and people who are in the property game use the bank as an infinite source of funding. So if you do have the time, Thursday, 6 p.m., I've put a little click button on the screen. If you just click that, it will go to the registration page. You can get yourself registered for that event. Fantastic. Let's jump into the 10 best investment areas in South Africa. Now, the agenda, as I've already explained on the marketing slide that got you here, one, we're going to go through how to choose a best investment area in South Africa. So I'm going to take you through some of the tips and some of the strategies and the techniques that I as an investor use to analyze an area. Number two, we're going to look at the latest trends. So I'm going to share with you some very, very interesting data about the best performing suburbs in South Africa during and post-COVID. So you can start to see, where the potential opportunities lie. I want to talk to you briefly about how to financially protect yourself against the next pandemic. And I think, the reality is, guys, our world will probably never be the same again. And maybe this COVID thing was the wake up that some of us needed to make our finances a bit more of a priority. So I'm really excited about that section. And then we're going to end just with my thoughts on the current economy and how you can leverage that to build your investment portfolio. Okay, without further ado, let's go into how to choose the best areas to invest in. Now, this might seem overly simplistic, but an area that is good to look at is an area that makes financial sense. Okay. And in the property game, the term that we use in the calculation that we most rely on is the one called gross yield. Now, a gross yield calculation is something that I do, I would say, on almost every opportunity that I look at. It's the first thing that I do if I'm looking at an apartment in Berea. The first thing I will do is do a quick gross yield assessment. It'll tell me if that deal is worth pursuing in more detail or if I should just move on, because if the gross yield doesn't check a green box, I'm almost certain that the deal won't work. So let me explain this gross yield calculation. So here it is, as simply as can be. It is your annual gross rent divided by your property price. So annual gross rent means your gross rent on a monthly basis times 12 so that you can get an annual view. So if you're getting rent of, let's say, 10,000 Rand per month, your annual gross rent will be 120,000. It will be that 10,000 times 12. And then your property price, right, times 100 gives you a percentage. That percentage tells you either, yes, this seems like a possible deal, or no, it doesn't seem like a possible deal. So here's a quick example. Let's imagine you've got a property with monthly rental of 10,000 Rand per month, right? Your gross rent per year is the 10,000 times 12. That gives you 120,000 Rand. That's your gross annual rent. Let's say that this property is being sold for 800,000 Rand. So that's the purchase price. 120 divided by 800,000 times 100 gives you a percentage of 15%. Now, in my experience, anything above 15% is a good indication. That's an area that's likely going to be a good rental area to invest in. Now, when you're looking at student accommodation or multi-lets, you actually need 20% or more for it to validate being a good deal. So let me quickly jump onto property 24 and let's do a quick analysis of a couple of gross yields. And I can tell you and I can show you how quickly you can analyze a deal. So I'm just going to go to my area, Berea in Johannesburg. Actually, let me just put on this filter here. So we're going to look at a couple of deals. Now, when I look in Berea, I always look for an apartment block. Sorry, it's just loading over here. I always tick the apartment or flat. Minimum price 200. I don't like going under 200 in Berea because those are usually, from my experience, sometimes the lower end of the market is more risky in terms of bad tenants, but also in terms of getting financing. The banks they don't like to finance certain buildings in Berea if they're too risky or if they're too run down, if they're not insured, etc. So I found a nice little sweet spot that between 200 and 350 are where the best deals in Berea are. So that's a little insider secret there. I know that this one's off the market if I'm not mistaken, but let's have a look at it. So here you can see purchase price of 245, and here you got estimated rental of 5 to 7,000. So if I'm doing my analysis on a Monday morning, I'll quickly go here. I'll say the average of 5,000 and 7,000, 6,000. So I'm going to use that as my monthly rent. I'm going to annualize it. And then what I'm going to do is I'm going to divide it by purchase price, 245. And then what I'm going to do is I'm going to times that by 100. It gives me a gross yield of 29.38%. Fantastic. That for me is an indication that it's above 15%. As long as the levies aren't too hectic, I should make money off this deal. So I can start to see that Berea is a very lucrative industry. Let's look at the multi-let market. Now, one of my favorite areas in the multi-let market is the South. So here are a couple of, blocks of flats. Let's have a look at this one. Okay. Same principle is going to apply. So we're going to take the rent, annualize it, divided by the asking price. So here you can see it's a block of probably about 6 flats. Let's have a look here. So 1, 2, probably six to 8 flats. That's the asking price of 1.56. And then here it says a yield or rental of 17,500 per month. That's probably not going to be a good yield. So 17,500 times 12 divided by this figure here, right? Our asking price 156,123 times 100. So this now for me is a 13.4% gross yield. This doesn't meet my minimum requirements. I would maybe put an offer on this property, but I'd have to put in an offer at maybe 1.2 million. Now, the gross yield, guys, please make a note of this. The gross yield is an indicator. It indicates that maybe an area might make financial sense. You wouldn't make a business decision on a gross yield calculation. You would have to use your return on investment. If you're not sure what that is, please go and check my YouTube channel. I've got tons of videos on this. It's really, really important that you're making a decision with return on investment, not with gross yield. The second big tip I have for you around analyzing an area, other than does it make financial sense with the gross yield, is to not listen to gossip, but to use tools and get the facts. Very, very important. So now one of the tools that I highly recommend is a tool called TPN. It stands for the Tenant Profile Network, and it's a credit bureau. And essentially what this data is going to be showing you is what is the risk and what is the potential in a specific area. So let's have a look here at some high-level stats that I pulled from TPN. Now, this first one for me is very, very important. What you'll notice here is between the band of under 3,000 to 7,000, this little band here constitutes almost 75% of our market. So what this is saying here is you can see the percentage of residential tenants categorized by rent value. So 20% of tenants in the South African market rent below 3,000. About 52.8% rent between 3,000 and 7,000, and all the way up until here, over 25,000, only 1.6% of the South African population is renting currently at 25,000 Rand or more. So where is the market that you're most likely going to get a return? Not here at the top end. You're most likely not going to get any money over here because the market is too small. But here is the greatest demand for people within our country. That is why low-cost, affordable housing within close proximity to economic activity within towns, that's where the money is. That's why Berea makes so much sense from a financial point of view, because it's close to economic hub. People want to stay there. There is a lot of demand. There's a lot of low-cost housing, and people can afford to live there. That is why, ladies and gentlemen, not based on an opinion, not based on what I think or feel, based on the numbers, that is the market you want to be chasing. Now, this I thought was an interesting slide for today because we've got people from all different provinces. Now, what you're seeing here is the estimated vacancy rate. Now, what I mean by that is the rate at which a property might be empty. So what you can see, Eastern Cape has got one of the lowest vacancy rates. It's sitting at 3.9%, meaning that over the course of a year, only 3.9% of the time the property was empty. That's a great average. Western Cape is sitting at 5.7. You can see that we've got KwaZulu-Natal, 6.5. Our Gauteng is probably the highest at 9.3. And essentially what you're seeing here is where the risk in the different provinces lie. So great stats to be pulling from their report. So TPN has what they call their investor report, something that I highly recommend. And what I also thought I'd do for you guys today, just to make this a bit more real, is to take you through a TPN report that I pulled recently for Berea. Now, I'm looking at a new investment there. So whenever I'm looking at a new investment, I look at the TPN report. So you can see I generated this about a month and a half ago, 10th of May. And essentially what I've selected is sort of the center of town. So the Heilbrows, Yeovils, the Berea area. Okay, now in this investor report, you're going to get a lot of information. You're going to get things like here are the property types, right? And you can see that 81% of the properties there are flats, which is why I always look for flats within Berea, but a price between certain brackets, because I know where the market is sitting in that point in time. If you look at maybe the Joburg South area, you'll see a lot more flatlets and rooms because that's the type of market that you've got there. If we continue down here, there's some information about property size and household size. You'll see your population group. This one's quite important for me. You want to see your education levels. So here you've got your grade 12/standard 10. You've got your percentage of people that studied higher, and then you've got some secondary. Now, those three colors, the blue, the green, or the lime, and then the gray, are probably the three most important ones because those are people who have at least the ability to be employed, right? Someone who's got no schooling or some primary schooling, they might not be able to get employed, but anybody above that sort of secondary should get employed. So what that is saying is that you take this 37%, which is the grade 12s, the 6.4%, which is the highest, and you take the 30%, which is some secondary, add those together, you're looking at maybe 70, 80% of your demographics in that area have some secondary or higher, meaning they've got quite a high chance or opportunity to be employed. Okay, so that's an important stat to look at. I also very much look at the employment status. So what you can see here, and this is just my opinion, but it's quite interesting. You've got 34% in the formal sector, 3% in the informal sector, and then you've got here about 55, 54% that is unspecified. Now, I'm not quite sure what that means, but my gut is saying that there might be a lot of foreigners or foreign nationals within Berea, and they might not be a part of the consensus, and that's why it's left as unspecified. That's really the only reason I can think, because I know the employment stats in Berea are very high. So I think that might just be an indication that there might be foreign nationals in that area. And obviously, that's just part of understanding the market. The household income, your annual household income, critical. Right, if you're renting for 5,000 Rand per month and your biggest demographic in that area are earning between 9 and 19,000 Rand per annum, they're not going to be able to afford to stay in your property. So looking at this graph, you can determine what percentage of your demographics earn a annual income enough to be able to pay off your rent. Very important question to ask. So these are the kind of stats that you get from TPN. You've got some transactional information. I have, to be fair, I think I've recorded a video on using the the TPN report, and I've put it on my YouTube channel. Again, you can go check it out. I just wanted to show you something that you could see. You don't have to listen to what the estate agent's saying, because the estate agent is going to try and sell you, and they're going to try and tell you exactly what you want to hear to get you to buy. You need to use tools and data to verify your decision. The last thing I wanted to show you just around the TPN report is it gives you your price trends. So what you can see here for a sectional title property, which is code word for like a flat or an apartment, you've got here your upper part of the rental band, which is hovering here at about 8,000. So that's 8,000 Rand at the top end. Maybe you bought a 3-bedroom apartment and you've subdivided it, and that's how you're getting 8,000 Rand. But that's pretty much the max that you can get for a flat in Berea. On the low end, you're looking at, 2.5, maybe 3,000. That's, maybe a bachelor flat that you're renting out. So that's sort of the low end of the market. Now, if you work on this this blue line here, that's pretty much giving you the average. That's pretty much telling you that, on average, you're going to get 5 grand per 2-bedroom flat that you're looking at in Berea. Again, very important that if the estate agent says 5 to 7,000 Rand rent, you've got to be able to look at this report and say, actually, my report says it's more, between 3 and 5,000 Rand. So is this estate agent, trying to tell me what I want to hear? Or, so you have to be a bit vigilant of that. So that's the investor report. I think it costs, I'm not sure, 20 Rand or 30 Rand per report. I don't think you should get a report for every deal that you look at. Definitely not. But if you're looking at, going to an area, let's say you want to do Midrand, or you want to do, I don't know, let's just say Midrand. What you can do then is pull a suburb report for Midrand and get all of these stats so that you understand the Midrand market without having to call estate agents or drive around. You can start to get some of the insider secrets. Okay. Now, here are some interesting slides just to, I guess, spark some interest. Now, these are not slides or data that you can get from TPN, from any of their reports. I just have a relationship with TPN and I get exposed to this kind of information. Now, what you're seeing here are the best areas to invest in currently in Cape Town. Okay, so you're seeing 3 different colored graphs, your blue, your green, and your red. The blue is giving you an estimate of what the capital appreciation is in that area. The green is giving you the average of the rental yield, and the red is telling you the risk of a non-paying tenant. So if we look at Greenpoint, Greenpoint is sitting at 10 to 12% capital appreciation. I'm not surprised. It's in city center. It's close to businesses. Young professionals want to live there. And Cape Town is, CBD is already kind of overcrowded. So I'm not surprised that there's a lot of demand in there, which is pushing up the value of the price. It's got a low rental yield. So what that means is you're going to find a property that's, sold for 2 million Rand in Greenpoint, but the rent you can get is 15,000. So your rent will most likely not even cover your bond, let alone your expenses like your rates and taxes and your other expenses. If we look maybe at Oakdale, which is in the middle of the screen, it's got a 7, maybe a 6 to 7% capital appreciation. But look at that rental yield. That's looking quite promising for me. That's probably a 10 to 12, maybe even a 15% yield. That starts to trigger me to say maybe Oakdale is where I should be looking. If you look at Maitland, which is sort of more on the right-hand side of the screen, about the 5th one from the right, what you can see there is it's got a low capital appreciation. It's got a decent rental yield, but it's got a very high risk in terms of tenants within that area. So what this is saying to me is I'd probably try the flipping strategy in Greenpoint, buy low, force the value of the property by renovating it and selling it for profit, because it's got a very nice, I would say, financial status for flips. If you're looking at Oakdale, I'd say that would be your buy-to-let, maybe multi-let market, because it's got a good residential yield or rental yield. And then I would say areas to avoid might be Maitland, just because of the high the high risk of tenants not paying on time. So that's a little snapshot of Cape Town. Let's have a look at Joburg. Now, why I started with this one is because I wanted to show you on the far left, there's opportunities that we're not aware of, and that is in Tembisa. Now, I'm not as familiar as Tembisa as I should be, but that is an opportunity where we're seeing 20, 25 to 30% rental yield. I mean, that's almost unheard of. That's the untapped market that I think some people who are willing to explore a new market and figure out something that they haven't seen before, I think there's a great opportunity there. Soweto, interestingly enough, there are great areas in Soweto, and then there's obviously not such good areas, and I guess that's everywhere. So it's got a slightly higher, I would say, delinquency yield than others. But what you can see is those are the two. Let's call them highlight areas from a freehold perspective. Okay, very important, freehold. Now, freehold means a freestanding house, not an apartment block. If we now want to look at sectional title, let's see what the best performing town is. And that, ladies and gentlemen, that first one there, Berea, is the reason why most of my videos and most of my students that I work with, I direct them towards Berea. Maybe not to invest. I understand that there's obviously risks in Berea. I've had delinquent tenants. I've had to pay my school fees, so to speak. But there's always going to be risk in business. You've got to realize what risk are you willing to take that warrants the reward that you might get. So if we look at Berea and Hillbrow, I mean, the yields speak for themselves. You're looking at 25% plus. The delinquency rate is not that high. Bellevue, Yeovil, I guess it depends on the deal. There are really nice parts of Yeovil where you've got great tenants. There's some bad parts. There's good parts in Fourways. There's bad parts in Fourways. There's good parts in every town and area. So once you've understood which area you want to invest in, the next level of detail is to figure out what streets are going to work. There's, for instance, where I invest in Joburg South. There's a place called Rosettenville, and right next door is Kenilworth and Forest Hill and Oakdale, and there's a whole bunch of suburbs there. Now, within Rosettenville specifically, you've got a main road that goes through the whole of Rosettenville. And what I've learned just from experience is that you have to try and be as far away from that main road as possible, because the closer you get to that main road, the more delinquent the tenants become. As you go a little bit further outside, you start to see that there are better tenants. When you start to go outside of that suburb, but you go to the next ones, Kenilworth, Forest Hill, etc., you find fantastic tenants. So, somebody might have said to me, or an estate agent might say, yeah, Joburg South is dangerous. It's a bad place to invest. And yes, there are certain places that might be dangerous to invest. But there are also little gold mines in between if you're willing to work a little bit harder, a bit longer on this. So please, don't listen to gossip. Use the facts, use the tools, use Lightstone, use TPN. All the data and all the knowledge is out there. If this feels overwhelming, go check out my YouTube channel. I've got a whole bunch of free videos on how to scan through a TPN report, how to use Lightstone to make a decision. All the knowledge is there if you're just willing to look for it. And number two, it needs to make financial sense. Gross yield. It's your gross rent times 12 divided by your purchase price times 100. Anything above 15%, that's an indication that it's potentially a good area worth exploring more. Remember to use your return on investment calculation to make a business decision. Okay. Now, so we've looked at kind of the trends that were leading up to COVID. Now what I want to share with you is what are the 10 best performing suburbs in South Africa during the COVID lockdown. So I'm sure you're very interested to see this. I only saw this data about a week ago, and it's very interesting. So let's jump in. Okay, so first of all, what you're seeing here are 20 towns within South Africa, and they're from different provinces. So you can see on the far right, you've got Secunda from Mpumalanga, you've got Bela Bela, and you've got Free State, you've got Sandton, Gauteng, you've got Johannesburg, you've got all of those. And then you've also got a little bit of Western Cape, which is on the left. The light blue is Western Cape, and then obviously each different shade of blue is a different province. So what we're seeing is Stellenbosch and Macassar. I've actually never heard of that place before. Those are the two top performing, let's call it towns within Western Cape, where during COVID, they had a good standing ratio of over 90%. Now, what that means, a good standing ratio is the the ratio of the person paying on time. So a 90% good standing ratio basically means that 90% of the time they were paid, 10% of the time they weren't paid. Basically what it means. So anything within above 90% is incredible. So Stellenbosch, Makassar, they have not really been affected. The tenants haven't been affected. They still have an income, surely. They're probably working from home, whatever it may be. You've also got Wellington, Durbanville, Brackenfell, Milnerton, Fishhook, Worcester, and then something Bosstrand and Somerset West. All right, so those are areas that have been low in being affected by the COVID spread. We've also got your Grahamstown, CBD. So that 84 there, just next to Grahamstown, that's Johannesburg CBD. 84% good standing ratio. Not bad. Not bad at all. You got Centurion, you got Sandton. Then we start looking in KZN, we've got Blackburn. And Free State, we've got Sasolburg, Bella Bella. And we've got a couple of some of the outer laying towns. But now, what I think you should be asking yourself is, have I looked at these areas? Because these areas have, through a pandemic, have survived. Now, remember, what are the two questions we have to ask ourselves? One, does it make financial sense? Is the gross yield good in that area? Number two, what do the stats say? What do my facts say? What does TPN say? That's how you're analyzing your area, is one with the yield, one with your facts. So what I did do is I did a little bit of analysis on some of these areas, and I worked out the gross yield. So first of all, starting here in the middle, you can see here the 84%. This is Johannesburg CBD, 84% good standing ratio. How has that affected the gross yield? So what I've done here is I've taken 4 cities: Johannesburg CBD, Sandton, Centurion, Kundweni. And these are just, I don't know if you call them townships or towns or suburbs or whatever it is. Now, what you can see here is the gross yield from 2013 all the way through to 2020. Okay. So what you can see here is CBD, on average, had about an 11.2% gross yield. Okay, Sandton at 10.12, Centurion at 10.65, and Kungweni a 10.11%. So even though those areas were decent during COVID, they don't really have the best gross yield, right? Does that make sense? Now, I've just shown you Berea, which I showed you was within the city of Johannesburg CBD, but there are also a lot of other suburbs within the CBD that don't perform well, and that's why it's brought the whole rate down. If we look at Western Cape, now immediately you can tell that Western Cape is a worse property market than Gauteng. You've got no gross yield. Even of these top performing towns, none of them have surpassed even 10%. So in Gauteng, we've got 4 suburbs that are really good in terms of the tenants paying on time within COVID, plus the yield is over 10%. Western Cape, you've got a whole bunch of good suburbs that have supported through COVID, but they don't make financial sense as an area. Interesting. So just because it's a good COVID area doesn't necessarily make it a good financial area. I also, unfortunately, I don't have too much data, but I ran it for Eastern Cape Blackburn, and you can see what's really nice is that Blackburn is definitely increasing in its yield, which means there's a bigger demand for tenants, people who want to rent. So Blackburn might be an area to keep an eye on. Okay, I know that was probably really quick and overwhelming. We do have a recording that's going to go out, and we will be sharing all of that with you. Now let's talk about something. I guess this is the elephant in the room. You know, a lot of us have been caught with our pants down in terms of this COVID situation and relying on one income stream with a maybe potentially not so stable employer has confused and scared a lot of people. And what I wanted to talk to you about now is how you can start protecting yourself against the next pandemic or the next economic crisis, because these things come in cycles. Every 8 to 15 years, there is some sort of economic crash or bubble burst, or, you know, there's different names for it, but the result and the effects are the same. We feel poorer and we struggle more. And I think within South Africa, and why I do these webinars and will do them for free as much as I can is because if we can educate ourselves from a financial point a little bit more, if we can be the Robert Kiyosaki, the rich dad, poor dad, the champions of change from a financial point of view, we can increase our economy and we can increase the livelihood of the people in our country and protect ourselves better against the next pandemic. So this has led me to a lot of reflection, and I think the future of employment and the future of our work is going to look very differently in the coming years. I don't think, and this is just my opinion, but I don't think there are going to be permanent employees in the future. I don't think there's going to be such a thing in the contract that says sign this to be a permanent employee because, I mean, well, I was a permanent employee. When I started out in property about 7 years ago, I was working for Dimension Data at the time, a global IT firm, uh, with I think close to $6 billion in revenue, or I can't actually remember, but it was a ridiculous amount. And I was retrenched because of financial issues. And I thought to myself, geez, I mean, a company with that much income, how could I not be permanent? You know, but it's very quick. That transition from valued employee to line on a spreadsheet is very quick, and anybody can delete a line. So I believe that COVID especially is going to now also start forcing more and more people to join the future of work. Now, what does the future of work look like? One, it's going to be remote, which is exciting. I think even if COVID wasn't here, more and more people are starting to look to work from home, to work from other locations. And now COVID is probably going to make that more of a mandatory thing because we can't have too many people in one, office space. So remote-based work is going to start becoming very, very popular. Number two, I don't think we're going to be permanently employed anymore, but rather employed per project. So you would essentially, in my mind, be hired for a 6-month stint to fix this situation. So maybe you're an accountant and you'll be hired by a company, and that company asks you to do their financials for 6 months. Basically, they're being audited or whatever it may be. You're going to come in, do the 6 months worth of work, and step out. So you'll come in, work a little bit permanently, but you're going to go out. And that project-based work, I think, is going to become the future. And also, with those two things in mind, multiple streams of income. That is going to become, I think, probably and should be the biggest thing on your mind. It should be things we're teaching our kids, our colleagues, our friends, our peers, because relying on one income stream it's no longer feasible. So we have to take personal responsibility of our financial futures. And taking that responsibility, in my mind, is earning multiple streams of income. Now, what could that look like? Now, for me, these are my multiple streams of income. I've got on the left-hand side, I've got some property income, and I'll break that down a bit further into what different types of income I can get there. Online business is another income stream. And then on the far right, I do a little bit of writing. Obviously got the book, and I do a lot of writing for other people, and I charge for that time. Now, I'm just saying this to hopefully trigger something within you that you could think and say, you know what, I work 9 to 5 every day. I earn my salary. What am I doing from after 5 to build my retirement, to build my financial security? Because your pension's not going to work. Your company's not going to look after you. I don't think we live in that time anymore where we can just take satisfaction that things will always be there. This economy and this COVID situation has shown us how fragile our economy is, how fragile the system is. Now, if you had 5 or 6 or 7 income streams and you lost your job, you've still got 6 income streams. You've got still 6 ways of making money. You might not have all the money in. You might not have enough to survive, but you've got a much bigger head start. So what kind of service or solution can you provide that can make you money? Now, if we look within property, there are multiple streams that you can earn from property. One, the buy and hold strategy. Very simple. You buy a 3-bedroom apartment in Berea, you rent it out, you make a bit of profit. You buy a block of flats, you buy a commercial property, you buy an industrial factory, you do a development, whatever it is. As long as you're buying and holding and you're getting that passive income, that's an income stream from property. You can do the buy and sell, which is quite an easy one. That's where you buy at a low market value. You buy, let's say at a 200,000 rand deficit, so it's worth 1 million, but you buy it at 800,000, and then you go and resell it for 1 million, and you make a difference on whatever you bought it for. That's the buy and sell strategy. There's obviously a lot of risks to that, and I've also got a bunch of videos on YouTube talking around that, so go check that out if that's something that interests you. You can do sourcing, or what we sometimes refer to as introductions. So let's say you've got no money, but you've got a bit of knowledge and you've got a bit of time, and you go and find 3 or 4 great deals, great investment opportunities. Why don't you go and sell them to investors? I've got a WhatsApp group of students on my phone, and I'm sure there's more than 150 people there, and they're constantly talking about who's got a deal. I've got 500,000 rand here. I've got 200,000 rand here. People want to invest. People want to do this, but they don't always have the time to find these deals. So could you find deals for investors and sell it off for a fee and make a little commission off every sale that you make? Property services. This one gets overlooked all the time. If you're an accountant in your day job, why don't you do some accounting for property investors on the side? Why don't you start an online business or an online education program where you teach property investors how to do their books in a tax efficient way? And then what you do is you put like a little payment gateway in between where your content is and the user. So the user has to pay 100 rand and they see your content. That's the idea of merging multiple streams of income with property, with online business, and start merging all of these concepts. Prop tech. One of my multiple income streams is my property app. I took my knowledge of property, I built an online calculator, and I've put it behind a payment gateway. So people pay 200 rand per month to use this calculator and to use some of the functionality, and I get an income stream from that. You don't have to necessarily buy property to make money in the property economy, right? Another one, this one is very popular. I know so many people who are now property coaches. I do think if you are considering a property coach, please do your vetting. Make sure that the person actually has properties and knows what they're doing, because as much as there's a lot of property coaches out there, there's very few good ones. But let's say you've done 2 or 3 good deals. You could maybe charge someone a couple of grand to take them through a deal, as almost like a financial advisor. So yeah, multiple different ways in which you could be making money for property. Now, these are just property examples. You need to be looking at this in terms of your suite of skills. What skills do you have that'll help you earn a multiple income? Because when your salary dries up, and I use the word when, because it's a matter of time, that COVID has shown us how fragile business is. You need to start looking after yourself and making sure that you're sorted. Finally, let's talk about leveraging the economy. Now, I have mentioned obviously COVID a couple of times. And as much as COVID has shocked us and rocked us, I think it's also shown us an incredible opportunity for people to enter the property market. You see, the greatest barrier to people entering the property market is money. It's the moolah, right? Now, the great thing about the economy is it's done 2 things. Number one, it has shrunk our economy. It's scared investors, which means people are trying to offload their assets very quickly and at a discount. Most people who are looking to sell their property today are financially distressed. And I can guarantee that because I'm one of those people, right? I've got 1 block of flats in Rosettenville, which is very, very bad. It's performing terribly. I only receive maybe 30 to 40% of what I'm supposed to receive in terms of rental every month. People can't, I can't withstand that much longer. Most people who have got properties can't withstand that amount of pressure, which is then causing a lot of people, a lot of investors to leave the market, to sell their assets at a discount because they want to get out, they want to try and recover, which means properties are lower than ever. Now's the time to be looking for those great bargain deals. And number 2, well, our interest rate of 7.25, which means getting capital is cheaper than it's ever been. I think this is the lowest it's been in 50 years. So not only are you finding low property values and people who are selling at a cheaper rate, you're also getting very, very competitive financing, which makes all of your deals just that much more lucrative. So I hope that kind of gives you a little bit of insight. What I just wanted to do before we end is I just want to spend a couple of minutes just taking you through two things. One, the YouTube channel, and one, my property app, just so that you do know what is available to you if you do want to get yourself educated. So this is that tool that I was telling you about, the myapp.property. And if you are new to property, this is a great tool to get you started. It's also got some training tutorial videos. So here what you can see is we put a whole bunch of video tutorials, so live deal analysis, etc. We've got here property educational, so how to invest in student accommodation, how to analyze a property deal in 30 minutes. So all of the different, content that you would need, all of our educational videos are here. So when I do mention, that I've recorded a video and I put it on YouTube, you can come check it out here. All of our content is here. The education's free. Okay. And then what's great is once you've got a bit of a hang of this tool, what you can do is you can start to analyze deals. Analyzing them yourself, you don't necessarily need a coach. You just need to know how this tool works. Here, for example, is one of the deals that I'm currently looking at. It's a block of flats with 16 bedrooms. And essentially, these are the 7 steps that I'm going to go through to analyze a deal. At the end of the summary tab, it'll then give me all of my financial predictions. So it'll tell me, that's a 11.38% return on investment, etc. It'll also, do some return on rate of return. It will give me some projections over, the next 20 years. And it does all the financial goodies so that you're making a sound financial decision. And then with a click of a button called Generate Proposal, what you're able to do is you're able to generate a detailed investor proposal document. And what this document will do, it'll enable you to approach an investor or a financial institution to be able to raise some sort of funds. So while I've been talking, the tool has automatically taken all of that information that I put into the app, and it's now produced this document that you're seeing now. And it's essentially pulled all the information that I required. And what it's done here is it's just kind of laid it out in a nice structured way. So you can see what the rental income is, the monthly expenses, you can see the profit and loss. And it's taken all the numbers. These are the kind of things that the bank's going to ask for. It shows the scenarios, it does the stress testing, and it also shows you some projections. So this I will also talk about a lot more at our webinar on Thursday around how to build the perfect investor proposal to attract bank financing. But yeah, just wanted to show you what the value proposition is of my property app so that you can also go get yourself started if that's something that makes sense. Fantastic. I feel like I spoke really quickly, but I want to make sure that we end at 7. So I hope that everything was covered. And if there's anything that I spoke too quickly through, you're always welcome to go and check the video recording afterwards. So guys, that was it. We looked at how to choose your best investment property areas in South Africa. Number 1, gross yield. It needs to make financial sense. Number 2, use data, not opinion. The latest trends in the rental market. So we went through pretty much the 10 best performing suburbs in South Africa during COVID. Now remember, just because it's a good standing, just because it's got a low delinquency rate doesn't mean it's necessarily a good area for financial gain. I just gave you a little bit of my opinion on how to protect yourself against the next pandemic. Future of work, it's going to be project-based. We need multiple streams of income, and you can, create a lot more value and earn a bigger salary if you're looking at different income streams. And then finally, we just spoke about the interest rate and the drop in the economy and how it's become somewhat of a prime opportunity to invest in property today. Fantastic, ladies and gentlemen. We are going to come to the end of the webinar now, and then I'm going to take on questions and answers. I just need to quickly, quickly need to change something here. Just give me a second. Sorry, I'm just getting another slide out here. Okay, save. So let me just share my screen here again. Sorry about that. Quick little glitch, but we are back in it, as you can see. So you should be able to see my screen. I just wanted to promote one of our events that are coming up. So we obviously have the one on Thursday, which is completely free. Please come and check it out. I've got How to Achieve Financial Freedom Through Property in 5 Years or Less. This is what my book is about. And I've been asked by numerous people to host a webinar and take people through my different principles and my steps that I show in my book. So what I've decided to do is on Saturday, the 18th of July, I'm going to be taking you guys through how I achieve financial freedom through property in just 5 years. And in this webinar, which will be happening on the 18th of July, it's going to happen from 9 a.m. to 1 p.m. So it's very detailed. It's very educational. What I'm going to take you through is a proven plan to reaching financial freedom in 5 years or less. I'm also going to share with you the 7 steps to determine if an area is a good investment for property. We've looked at the 2 things today, right? The gross yield and looking at the facts. There are 5 other key things that you need to look at when analyzing an area, and I will be speaking about that in our detailed workshop. How to analyze property investments. So I'll be analyzing your deals live. So if you do attend this webinar with us, you're welcome to send me deals beforehand, and then I will analyze those deals live with you on the workshop. And I'll take you through some of the deals that I've looked at, so some buy-to-lets, some flips, some multi-lets, so you can start to see exactly how we as professionals do it. I'm going to share 5 different ways to finance your property portfolio without the bank. So some, advanced financing strategies is what you're going to learn. Also the legals, the structures and taxes in your property business, how to essentially, be the most tax efficient that you can be. Now, ladies and gentlemen, this specific webinar is valued at $4,997. That is what I would usually charge someone for 5 hours of my time on a Saturday. But we've got a really nice discount going. It's our COVID discount, so it's going to be more than 90% off. All that you need to do is click on this little green bar that is on your screen. It'll then open up a registration landing page. And on this registration landing page, you will see some more of the details. As I've mentioned, it is going to be happening on the 18th of July from 9 a.m. to 1 p.m. The cost for this webinar for this week is only $399. So not $4,997, which it usually is. Today we're doing it for $399, just as a way to entice you to come and join. It's going to be a very detailed session. I'm going to take you through pretty much everything that I know about how to become financially free. I'll show you the different steps that help me become a published author. So when you're on this registration page, you can go down, you can see what all the learning outcomes are. And then if you would like to register, please just EFT the $399 to the below banking details. Just put in your details here. And then once you've got that, you can send a proof of payment to myself or Hopolo. We will then get you registered on this premium event. So I hope that makes sense. Just to end off quickly, also we've got the how to use bank financing to build your portfolio. So if you do want to get registered for that, it's free. Go check it out on Crowdcast. Finally, we sometimes still get questions about how to get a property coach. If you do want to connect with any one of our coaches here on screen and get some one-on-one personal time with a professional investor, please just send me an email with the subject coaching at lawrence@housebuyers.coza, and I can let you know more about our coaching program. Fantastic. It is now 5 to 7. I think we have made the time that we wanted. I am now going to open up for questions. I see that there are over 20 questions. So as I mentioned, guys, all I'm going to do is just answer 5 or 6 relevant questions. Make sure that everybody can go home at 7 p.m. And then I'll answer the questions later this evening and tomorrow morning. So you can always just come back, check in, and see when your question's answered. So let's see here. Okay, I'm going to start here with Jacob. How do you analyze an area so that you're able to identify as your best investment area? So Jacob, great question. 1, gross yield. If you're looking for rental, gross yield. Now, one of the keys when you're looking at a rental deal, it needs to be an old area. It needs to have a lot of equity. It needs to be close to economic activity. Those are the 3 key things for me. It needs to be an old area. Old areas tend to have more equity than new areas. I would avoid new builds. Honestly, developments and new builds, avoid them because they're very, very, very average deals. They're not good investments. The developer tries to suck you in by saying, you won't have to pay levies for the first year, but that's just trying to entice you to make a decision. Trust me, a new build is not a good idea. You want to be looking at older areas. like a Kempton Park in the East Rand of Johannesburg. It's an old area with big houses, right? That's a great opportunity for you to buy the house, sectionalize, put maybe 5 rooms in there, and then rent out to 5 different professionals or 5 students. And that rental is going to more than exceed your expenses. Make sense? So when you're looking at your investment area, always look at the financial side of it. Look at your TPN report. Make sure it's old. Make sure there's equity. Make sure that essentially that the income or the opportunity of income is greater than the expense. Okay, let's see. Tandeka, how to analyze a property investment deal such that you know it'll be cash flow positive? Okay, so great question, Tandeka. What I'd like you to do is to go onto my YouTube channel or go onto the My Property app tutorials page. I've recorded a webinar about 30 minutes talking about cash flow investments. Now, cash flow, for those of you who don't know, that is when you buy a property where the rental exceeds the expenses, and whatever that difference is your profit, or what we call our cash flow. So an example of that is buy to let. That's when you buy one house and you've got one tenant. Okay. A multi-let is one house, multiple tenants. So an example of that is student accommodation. It's one big house, but you might have 5 or 7 students in there. Then you've got commercial. This is when you start renting out to businesses. So all of these different strategies rely on, is it a positive cash flow, which means does it have a positive profit at the end of the month as opposed to a loss, which obviously doesn't make sense. And Tandeka, maybe you can join our webinar happening on Thursday, because I'm going to talk about how to find and only use positive cash flow properties in your portfolio, because it's going to help you access infinite amounts of money at the bank. That's the secret. Okay, let's see here. Winnie, how to find distressed properties? I would probably give you 2 options here. One would be to go through either an auction or go to the repossessed sales on the repossessions from banks. So you can go to Netbank or Standard Bank or FNB, and they'll have a tab on their website that says repossessions. So those are all people who have defaulted on their bonds, and the banks are repossessing the property to the highest buyer. So there's some distressed people there. Auctions also often attract a lot of distressed people, because you go to an auction because you can't afford, whatever it is that you're in. The place where I've probably made and found most of my distressed leads was through a letting agent. So a letting agent or a rental agent is someone who's managing your tenant, right? So they work for the landlord by managing the tenant. Now, why I find a lot of deals through that avenue is because the letting agent knows which owners are distressed. The letting agent knows which tenants aren't paying. So the tenants who are not paying are obviously posing a risk to this landlord, and the letting agent is managing that. So you go to the letting agent and you say, which of your landlords are struggling and which are likely going to sell their property for a discount because of the frustrations that they have. So a great place to start. Katlejo, where is the best area for Airbnb rentals? Okay, good question. I would think Cape Town is probably your best bet. Any kind of tourism hotspot, Sandton would work really well, or any of your, like major business industries, if you're looking at maybe doing the Airbnb strategy for young professionals, so let's say someone in Ghana works for a bank and they relocated to South Africa for 6 months on a work project. That's perfect for an Airbnb strategy. So I would say any kind of strong economic center where you could get professionals could be an Airbnb strategy, or alternatively your coastal towns. Cape Town I know is really big with Airbnb, because during the tourism months people flock here like birds. So that would probably be, obviously with Airbnb, the key thing you got to keep in mind is what is your vacancy rate going to be, or what is your occupancy rate going to be? And that's something that not really anyone can tell you. You don't know that the 4 months from November to February, your property is going to be fully booked because it's tourism season. So Airbnb for me is quite a risky strategy. Wandisile, how do you analyze and do a no money down deal? So Wandi, I think the best thing that I can do is also send you to my YouTube channel. I've got a video there on how to use other people's money, how to use investors' money. Probably the best strategy to get started with would be sourcing. So that's where, again, you find the deal for the investor. You run it through the Buy Property app. You get that nice investor proposal that shows that it's a good deal, and you sell it to somebody for 10, 20, 30,000 Rand. That's actually how I got started. I didn't really have much money to actually buy a property. So what I did is I bought, or I found about 10 really good deals, and I sourced two of them off for about 30,000 Rand each. So I made 30,000 off one and 30,000 off the other just by basically connecting the buyer and the seller and getting a commission off that transaction. And that 60,000 is what I used to then purchase a buy to let. So that's maybe where you want to start. Okay. Is it advisable to purchase from a developer even though the first repayment is, say, in August 2021? So that's from Cav. Cav, I'm happy to sit down with you on a one-to-one basis and we can look at your deal. But just do me a favor. Take your rent that you're going to get, times it by 12, divide it by whatever you're paying. It's going to be less than 15%. It's probably going to be around 10 to 12%. It's not a bad deal. It's not a great deal. If you want to buy from a developer, it means you're buying a safe deal and it's going to have a low risk, low reward. What I'm more interested in is taking a little bit more risk, but getting equally more return and reward for it. So Kev, happy to chat offline if you want to know. I'm going to do one more question. Again, Kev, how do you ensure I will have a tenant from day one? So usually when I'm looking at a buy to let, let's say again in Berea, I want to know if I'm buying the tenant or not. So if I'm buying a vacant property, I'm not very excited about that because, like your point, where am I going to find a tenant? It's probably going to be empty for a couple of weeks. So I like to buy properties that are already tenanted, and that the tenants have been there for maybe a couple of months, hopefully a couple of years, and they have no intention of moving. So good question. I would definitely want to know if my property that I'm buying is tenanted, and if so, I want to see some financials, and yeah, that obviously adds to the sale. So that, ladies and gentlemen, was a lot of information in a short space of time. But you know what? I really just appreciate you all being here and being serious about taking your financial futures to the next level. What I am going to do now is I'm just going to put on some background music, go make myself a cup of tea. And then when I come back, I'll answer the other 13 questions. If you do need to get going, obviously you've got dinner or family or whatever it may be, you are welcome to go. You can come and check the recording later on. If you do want to stay on the line for the next 5 or so minutes, you can stay on and I will answer all. I think there's 15 questions left. I will answer all 15 questions. So yeah, thank you once again for joining us. Please email me. Please come to our webinar next week, Saturday. It would be great to have you there. We're going to be doing a lot of those kind of detailed sessions and make sure that you walk away knowing how to become financially free in less than 5 years. But yeah, until next time, happy investing, everyone. Okay. I see there's still about 50 people online. So thanks for staying with us. I'm going to now spend 10 or 15 or so minutes just answering the last few questions. Okay. So, Jason, will you actually be able to find deals on platforms like Property24? Yes. Jason, great question. The thing I found where people struggle is they try and force a strategy to work in an area that doesn't work. Now, if you're looking for a buy-to-let, for example, and you go to Berea, you're going to find 1 in every 2 deals works. If you try and do the buy-to-let strategy in Sandton, you're going to look forever and never find a deal that works because that strategy just does not work in Sandton. The capital appreciation has far exceeded the rental appreciation, which means your properties that are R1 million are only renting for 5,000 Rand. Whereas in Berea, it's the other way around. The capital appreciation hasn't gone as quickly as the rental yield. So the rent is at 5,000 where your purchase price is at 250, which means your rent more than always covers your expenses on a month-to-month basis. So yes, Property24 is a great platform when you know your area and you know with certainty that your strategy will work in that area. Okay, Kev. Hi, Lauren. Thanks for hosting this session. um, oh, sorry, where that question go now? Don't know where that question went. Oh, here we go. Does this TPN tool break down an area and location? Yeah. So you can go and scroll quite far down in terms of TPN. So you can you can search for, Joburg as a province, what the stats are. You can look at Joburg South as a maybe a more granular region. You can look at Rosettenville. You can look at a street. You can look at a complex. So there's lots of different filtering tools that one can use to get a lot of detail out of TPN. Okay, Jason, I have a lot of knowledge in property, but no experience. I need to start. I need real ways to find a deal before I'm able to build my team. Jason, great point. The honest truth, guys, is the education's all out there. Um, I've got probably about 20 hours worth of free content on my YouTube channel, and I'm one of the few people creating content. There's tons of people creating content. There's articles, there's videos. All the knowledge to become an investor in any field is online. If you want, to have someone help you take action, that's when you get a coach, right? That's when you get a personal trainer who screams at you to run and to lose that weight. Everybody knows how to lose weight, but it's until you get a personal trainer that you actually start to take losing weight as a priority. Same with property. If you want to get somebody to motivate you, get them as a coach. So that's my advice to Jason. Okay, Jamie Ryan, would you say it's okay to invest in a province one does not live in? So he's in Cape Town, he wants to invest in Kempton Park, right? You know what, Jamie Ryan, I think it is fair. I think you can invest anywhere, but when you start in a new area, and let's say you want to now invest in Kempton Park, you're going to need to go to Kempton Park once or twice and go view a couple of properties so that you know the area before you can invest. So yes, I think Cape Town's market is quite tough. I haven't found an area here yet that I can exploit. So I'm still investing in Joburg, but I've also got my whole team there. And when I do look at purchasing a property, I take a quick flight over the weekend. I go look at the property, I come back, and I can make a decision. So yes, you can do property from a province outside of yours. I would say you probably want to start in your own province, and as you build up confidence and expertise, you can then take it to the next province. Yes, Avash, the recording will be accessible later. We'll either have it to you tomorrow or by the end of this week. Kev, yeah, unfortunately, I don't have a Durban version of those stats. I only have Cape Town and Joburg, just because those are the two areas that I look at. So I asked her specifically for that content. I can ask them for the Durban equivalent and email it to you. So just ping me. Andre, any thoughts on the Aerotropolis development in Ekurhuleni? To be honest, Andre, I don't know of it, but I know developments, they're all the same, So you got to realize that if you're buying from a developer, you're not necessarily making any money in property. That developer's making money off you. Use the gross yield calculator. That's going to be the quickest way for you to determine if this deal has any validity. If your rent times 12 divided by the purchase price is less than 15%, you're not going to make money. Even a new build, even though they sell you that you won't have to pay transfer costs, that you won't have to put any money in the deal, they sell you that way. They try and they contractually get you into a deal. Now, the positive side of a development is that you might buy at the right price. You might buy at the right phase. Let's say you're the first one to buy into that phase and you buy at 100,000 Rand discount to everybody else. And when you actually transfer the property, it's worth a couple of $100,000 more. Yeah, you can win in that game, but you're gambling then. You're speculating. So, yeah, I would say maybe have one or two developments or off-plan properties in your portfolio, but also know what it's there for. It's there to be a gamble that you might make profit. What I'm trying to teach, or what I specialize in teaching people, is it needs to make cash flow sense from day one, not day 5, not day 50, not day 500. It needs to make money day one. Okay, Tandeka, I have access to bond finances, but do not have access to money for attorneys and bond registration. Can the bank pay those for me? Okay, so sometimes, Tandeka, what you will see is the bank will loan X amount of percentage loan to value. So let's say they're going to loan you 90% loan to value. That means for 100,000 Rand purchase, they are going to give you 90,000 Rand. So 90% of the value of that property. I have heard of instances where people have gotten 100% and even 105% loan to value. Now, 105% loan to value means that the bank will pay 100% of the purchase of the property, plus they will pay your bank registration fees and your attorney fees. It's not common, but it's been done before. It will depend on your affordability. So come check the webinar on Thursday because I'll be talking about that essentially. Okay, also Tendeka, in the future, webinars kindly also discuss property investment structures and tax benefits. Again, I've done a YouTube video on my profile all around structures, legals, and taxes. It's about 15-20 minutes, and it basically breaks down which vehicles to use to have the most tax benefit. Maureen, is it advisable to take over existing tenants or find new ones? Great question, Maureen. You got to look at the tenant profile, right? So I would like to see 6 to 12 months worth of financials from the landlord so that I can see how this tenant behaves. You know, if this tenant behaves over 12 months, he behaves really well. He pays every single month on time. I mean, keep the tenant, right? If it's not broke, don't fix it. But if you see from the financials that the tenant pays half of the time well, half the time bad, I might then put a clause in my OTP that says my offer is subject to you evicting the tenant because I don't want this tenant on my books. Okay, let's see here. Roger, how can I purchase a vacant student accommodation property in Woodstock, Cape Town, while currently unemployed? I currently have a deal. So Roger, you probably want to go for the rent-to-rent strategy. If you don't have any money, you're not going to be able to buy the property. If you're unemployed, the bank's not going to loan you money. I do have a contact that will loan to you if you're unemployed, but you still need to put money down in terms of the deposit. So my best advice there is go onto our YouTube channel or go to the blog and go look for rent to rent. That is a strategy that requires zero capital and you can get into the student accommodation market. Let's go check that out. Okay, Joanne, how would you determine your offer price on a property with a granny flat? Okay, the market value of the property is 560,000. The property needs rehab of about 60,000. Would you base your offer price on rental income or market value of the property? So, I mean, Joanne, this is a little bit more detailed. I don't think I can answer this confidently over a webinar. I need to see a lot more detail. But in order for me to determine an offer price, I'd need to see Lightstone, what's the resale value of the property. I would need to see the rental information. So what's the income that you can expect? What's the expenses? Got to work out basically what your cash flow would be, what your return on investment would be, and what your exit strategy would be. Based on those three criteria, I could then say, you know, it's a worthwhile investment to buy it at maybe 420. But I would need to see a lot more detail before I can tell you what a fair offer price would be. Okay, Seasware, how do I start a trust? Well, first of all, Seasware, make sure that you need a trust before you create one because they're expensive. They cost about 1,000 Rand to manage per month. Again, go check my YouTube channel for legal structures and taxes, and I talk about trusts and how to set one up. But make sure that you only need a trust when you've got wealth to protect. If you don't have wealth to protect, don't set up a trust. It's a waste of money. Okay, let's see here. Where do I get investors from? Great question. You first got to have a deal. That's the first rule of finding investors. A lot of people come to me and they say, Lawrence, I need an investor. I want money. But they don't have a deal to back it up. If you've got a deal that makes financial sense, the money will flow. You know, as I mentioned, I've got this database of students that I've worked with. And some of these guys have a couple of million Rand in savings that they're just looking to invest in, but there aren't any good deals. Now, there are lots of those kind of people in South Africa. If you can figure out a good niche market, you've got a strategy in an area and you're finding deals on a regular basis. You run it through the app, you get those nice investor proposals. You're not going to make a lot of sales. But you just need one investor to believe in you and pay you 20,000 Rand for the grunt work of putting the deal together. You know, so there's a lot of, also another YouTube video. I know I keep telling you guys to go there, but it's just because all the education's there and I don't want to re-educate. Just go and check what resources are already available. Last question, Cindy, is Maboneng or Doornfontein a good investment area? Yeah, I think up and coming areas, definitely. You know, what I know from Maboneng is that it's an up and coming neighborhood. It's being gentrified. I think that's the word. And Yeah, it's got the signs that it's an up and coming neighborhood, but again, what I'm scared of is speculating. So is Maboneng a good investment area? Well, number one, does the gross yield make sense? So what's the average rental for a two-bedroom apartment in Maboneng? And what's your average purchase price? Tell me what the gross yield is, and I can tell you that it's either going to be a good or not good investment. And then number two, look at the stats. Look at your tenant demographics. Look at your age, your income levels, your education levels. Tell me what the risk is. And then run the deal through the calculator. Show me an investor proposal for an opportunity. Show me that you can get a return of investment of 10% or more, and I can tell you that yes, it's a potentially good investment area. That's really the secret, guys. That's how you do area research. Is you go and analyze 10, 15, 20 different areas. You see which one's got a better gross yield, you see which one's got a good tenant demographic that matches your risk profile, and that's how you do it. So that was the last question. Is there anyone else that maybe didn't get a chance to ask the question that still wants to have that opportunity? If so, please say your piece now or forever hold your tongue. I don't know what that saying is either. Let's just see here. Stevens, thanks for being here, man. Roger, thanks for coming through. Cindy, yeah, Cindy, I think we also need to speak about that deal. If it's the same Cindy, I'm pretty sure it is. Just send me a time for next week, and we can catch up on that deal that you have. Awesome, guys. Thanks, Jerry, Maureen. Um, it's good, good. I can see lots of people are really enjoying this. So thanks for coming. Thanks for attending. If there are no other questions, I'm going to then end this call. Guys, hopefully I will see you around. Take care. Cheers.